For most of history, people thought money was simple. Gold, silver, paper bills, numbers on a screen. But behind every currency, behind every bank, behind every government, lies a network. A web of institutions, private meetings, handshake deals, unspoken agreements, and global alliances that most of the world never sees. Today, we're told that global finance is transparent, regulated, and predictable. But if you follow the trail far enough, from Wall Street to London, from Zurich to Basel, from ancient merchants to modern bankers, a very different picture emerges. This is the untold story of how a handful of networks shaped the world's financial system. Not in a day, not in a decade, but across centuries, quietly, strategically, and with consequences that still shape every nation on Earth. Welcome to the hidden architecture of global finance. Centuries before modern banks even existed, merchants were the first global financiers. Venetian traders crisscrossing the Mediterranean, Arab merchants moving silk and spices across vast deserts, Dutch shipowners navigating the high seas. They weren't just trading goods. They were building trust. They were creating credit. They were lending to kings who desperately needed money for wars, for ships, and for expansion. As these networks grew, so did their influence. Imagine this. A merchant in Amsterdam could finance a voyage to Indonesia, insure it through an associate in London, and then sell the goods in Paris, all without ever leaving his home office. This interconnected web became the very first version of global finance. It wasn't controlled by governments. It was run by those who understood one fundamental truth. Money flows along the safest, fastest, and most trusted network, not necessarily through the most powerful nation. And that principle, established hundreds of years ago, still governs our world today. As empires expanded, their need to borrow grew larger and larger. Soon, merchants alone couldn't handle the sheer scale of the loans required. So, governments stepped in and created new institutions to manage their debt. Central banks. The Bank of England, founded way back in 1694, became the blueprint for all others. It didn't just issue currency. It organized the entire financial system. It was a masterstroke, turning private credit into public power. It connected wealthy lenders, political elites, and global traders into a single, powerful round table. Let's be clear, central banks were not originally created to serve the public. They were built to stabilize governments and, more importantly, the networks that funded them. Fast forward to today, and we have the Federal Reserve, the European Central Bank, the Bank of Japan, the People's Bank of China. They all operate independently on paper, yet they are deeply interconnected through interest rates, currency swaps, liquidity lines, and countless agreements most people will never even hear about. Together, they form the very spine of global finance, quietly setting the cost of money, the flow of capital, and the rhythm of the entire world economy. Many people believe New York is the center of global finance, and in some ways, it is. But the real, historic heartbeat of international money beats in a much older place, London. And I don't mean London, the city in the UK. I mean London, the network. Specifically, the City of London, a square mile with its own rules, its own courts, and centuries-old financial traditions. Here, the world's largest banks operate within walking distance of one another. It's a tiny patch of land that once powered the British Empire, and now it powers global finance itself. But the real secret isn't London's stock exchange or its shiny skyscrapers. It's the Eurodollar market, born in the 1950s, where trillions of US dollars circulate completely outside the control of the United States. In London, money moves in the shadows. Offshore funds, private agreements, complex derivatives, and swaps. The city acts as a neutral ground where nations compete, corporations negotiate, and banks coordinate, all within a network that is older than most of the countries they serve. This single network profoundly shapes global interest rates, currency flows, and the price of risk worldwide. Hidden away in the quiet city of Basel, Switzerland, sits an institution called the Bank for International Settlements, or the BIS. To most people, it's just another name, another building. But to insiders, it's known as the Central Bank of Central Banks. Founded in 1930, the BIS was originally created to coordinate Germany's war reparations after World War I, but over the decades, its mission evolved dramatically. Today, the BIS is the exclusive club where the world's top monetary authorities meet to discuss crises, coordinate policy, and set the rules for global banking. Its meetings are held behind closed doors. Its members are the most powerful financial figures on the planet. And its decisions ripple out to affect every interest rate, every mortgage, every loan, and every banking regulation across the globe. This isn't a conspiracy theory, it's financial architecture. The world economy needs stability, and the BIS exists to weave the threads between central banks, regulators, and global markets. It is one of the quietest networks in finance, but without it, the modern financial system would likely collapse into chaos. After the devastation of World War II, the world desperately needed order. Currencies were unstable. Entire economies were destroyed. Nations needed new rules, and above all, capital to rebuild. Out of this necessity came the International Monetary Fund and the World Bank. These two institutions were built not just by nations, but by powerful ideas. Ideas of global cooperation, development, and stability, but also ideas of control. The IMF loans money to countries in financial trouble, but the loan is only the beginning. Attached to it are strict conditions, economic reforms, austerity measures, privatization of state assets, and deep financial restructuring. Meanwhile, the World Bank funds development projects like roads, dams, and infrastructure, tying countries into long-term financial relationships that shape their economic destiny for generations. To some, these institutions are lifelines, offering a path out of crisis. To others, they are tools of influence, extending the power of the networks that created them. But one thing is certain, they expanded the reach of global finance far beyond just trade and banking, and into the very fabric of governments, policies, and entire national economies. When people imagine global finance, they think of numbers on a screen, stock charts, market tickers, breaking news headlines. But in reality, global finance is a living, breathing web, built over centuries by merchants, bankers, traders, central banks, offshore hubs, multinational corporations, and global institutions. It is not controlled by one country. It is not ruled by one bank. It is not dictated by one single person. It is a system sustained by interconnected and interdependent networks, mostly invisible, yet absolutely essential. These networks built the world we live in today. They are behind the loans that nations rely on, the currencies that we trust in our pockets, and the markets that our economies depend on for survival. And although technology changes at a dizzying pace, the fundamental architecture does not. From the merchant guilds of the Renaissance to the central banks of the modern era, from gold coins to digital currencies, the secret networks remain. They don't just run global finance. They are global finance. Thanks for watching. If you found this journey into the hidden world of finance fascinating, make sure to like this video and subscribe for more deep dives into the systems that shape our world. See you next time.